Hello and welcome to Real Estate in Focus. Today's topic is mortgage, and of course when you are talking about mortgages, the first thing that comes to our mind is buyers. No, today it is about mortgages and sellers. When you're selling your property, you might be charged some big amount of money for not planning this ahead of time, and that's why we have David Mcgee, an established and experienced mortgage guy that works with RBC, that will help us to hopefully plan our mortgages before selling or discharging or whatever options that we are considering. So thank you for coming, and if you can please help us how to deal with this scenario.
Yeah, no, there's a lot of things that sellers should consider when they're looking to sell in planning their mortgage, and a lot of these are things that they should actually try to plan if possible, maybe even as much as a year before they plan to sell, just because then they have the opportunity to take full advantage of all the prepayment options and other benefits with their current lender, to really put themselves in a better position to possibly get a better rate when they move to the new property.
So planning is one item, but if you're closer to your moving time, the other option that might be available is porting, which a lot of financial institutions allow that, right?
Absolutely. Most financial institutions will allow you to port your mortgage, which is essentially just taking that mortgage off of one property and putting it onto another property. In most cases, people are either upsizing or downsizing, so then they have terms that are called porting and increasing or porting and decreasing. Usually if there's a change in the mortgage amount, you may end up with a blended rate or an average rate. So your rate would be averaged with the current rates.
But at least you will save on penalty.
Absolutely, you can save on penalties by doing the port. Right. But it is important though to fully look at all of the options, because sometimes it does make sense to pay a penalty and get a new mortgage, because you can actually save more money by doing that.
So they don't have to stay basically with the same lender?
Don't have to stay with the same lender. And it's important just to look at all of the options that are available to you, because it's not, there's a lot of opportunity to potentially save money.
So basically it is not a black and white issue like anything else in our life. You have to look at this and probably read your document and see what are the alternatives, options, and privileges you have with the mortgage that you got when you purchased the property. You might be allowed with a large prepayment option, or you might be allowed to port it. So considering all these different kind of factors that plays a role, you might save a lot of money at the time of discharging or porting or whatever options you consider. So hopefully this video will encourage you to plan your mortgage before selling your property. Thank you, David,
Thank you.
Thank you for watching.